Okay, welcome back. It's still June 13th, and I wanted to do this video to respond to a question I received about managing a trade, looking at lower time periods and higher time periods. And the NASDAQ, I think, is providing a good example. So let me dig into that a little bit, and we'll see how that goes. For this illustration, we're going to be focusing on this bar and this bar. These are two daily bars. And the context is that we got up here a couple of days ago into an exhaust situation. So the exhaust bar formed, the move down inside the envelope, closed right at the envelope. The next day, we're inside the envelope, pushing down, closing below the PL dot. And at this point, you start to wonder if we're setting up for a weekly PL dot refresh, or maybe down here to the, this is the monthly envelope top. But what we had the market come down to the 1-1 low, reversed, and closed up here at the envelope top. So I want to show how that played out on the lower time periods. So this is the period in question, and this is the hourly chart. And market, this is the 9 o'clock bar, 10 o'clock bar, and then this is 11. And what did we see? We saw the hourly moving sideways from the overnight market, and then on the open started to push down and then closed back up here. And then as the 10 o'clock bar started to unfold, it pushed down below the daily envelope. And this could be an indication to get excited that this market is heading lower. And what took place on the 15-minute bar, on the 15-minute chart, will show us a great deal about this hourly bar and why the short was not a good idea, and that it might have been time to cover. So once again, we're focusing in this area for now, and this is the 15-minute chart, and this is that bar way down here below, and then it closed back up inside the envelope. So this is the first indication that that hourly bar and that this daily, because you remember this was where the 1-1 low for the day was. So this bar came in, it hit support, and it closed back inside the envelope. The next bar came down, tested the envelope bottom, and then closed way up here in a C wave. So this would have been the ideal bar to get out at. If you waited for a little bit more confirmation, this would be the bar to either get out at or to reverse and go long. And as this market continued to push up in C wave, then you get to this point where the market closed back up above the daily PL dot. And when it did this, of course, the daily PL dot becomes support, all the way through lunch, and then takes off again after lunch up here to the envelope top. So this is a pretty simple, pretty straightforward example of this lower time period showing why this downward move aborted, and it was either time to cover or time to reverse and go long. So from a trade management perspective, this line down here is roughly the 1-1 low for the daily, and we saw the 15-minute bar react very strongly to that and then close up inside this level of support right at higher time period support. And the short trader would have been out at this point. Somebody that wanted to go long and reverse, this area is the stop down here initially, and when prices start climbing up here in these C waves, moving your stop to break even would be the rational thing to do. If you're trading multiple contracts, and obviously if you have two contracts on, you can burn one and you can move your stop to break even and go about your day. And then getting up here into this weekly PL dot, or I'm sorry, daily PL dot, and seeing the support come in multiple bars, that's the pyramid opportunity. And so and you see it come down again and test this here, but still we're back up here at the daily envelope top. So there's a lot of movement pushing this market up, and it's hard to say what every trader wants to do. It depends on your risk profile. It depends on your account size. Maybe it depends on what you have to do for the day. You don't have time to mess around with this. But the lower time period led the way on this one. And the last point I'll say is that this 15-minute bar here, going over to the hourly chart, gave us an indication what this hourly bar was going to do. And that's the key here, is the lower time period, 15-minute, 60-minute, showed that the daily trend down was aborting. And then whether you just stood aside or whether you reversed, that again becomes part of the nuances of your trading style. So I hope that answered the question. If you need more explanation, please let me know. I'll do the best I can, or I'll bring in Ted to help me out. That's it for today on this video. Good trading, and we'll see you again next time.